This one time, Bitcoin went from 6 cents all the way to 36 cents, and then it crashed down to 21 cents. And then another time, Bitcoin went from 85 cents all the way to $29, and then it crashed to $3. And then another time, Bitcoin went all the way to $213, and then it crashed all the way to $70. And then another time, Bitcoin went all the way to $1,100, and then it crashed all the way to $239. So the moral of the story is, don't buy Bitcoin, because you know it's going to crash again.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a alright day today. It's actually been a little bit rough, I guess, for the market, specifically if you're new, especially with a lot of these altcoins, which is what we had spoke about in the previous video. But, you know, if you see what we're looking at right here, we were basically in this sideways channel, and once we got this daily candle closed yesterday, this is on the daily, that was a confirmation of a breakdown. So there's like a lot of panic going on in the space, people saying that the top is in, it's over. I'm going to talk about what is actually happening, because there's one thing we've talked about for quite a long time on this channel, and if we look right here, you can see that the fear and greed is actually in the fear territory. Now, historically speaking, the more fear that there is, the better buying opportunities that there are, right? There's that old saying, buy the blood in the streets, even if it's your own blood, right? That's what they say. And you can see that when we do get down to some of these lower levels, that tends to be some of the better buys, and some of the higher levels when we're in extreme greed. You know, for example, these peaks right here, 71, or the most recent one that we had way up here at about 83. Also, not to mention, I did sort of give a warning in my previous video saying that everyone was just throwing all of their money into these crazy meme coins that, I mean, basically every single one was either a rug or a scam. Most of them are down like 90+%. And generally when you see that type of gambling behavior, it kind of signals that something might be coming, right? The average retail is no longer happy holding Bitcoin. They need the 1,000x, the million X, right? Which obviously we're not getting any of that. Most of the altcoins are hammered pretty freaking hard. And as for Bitcoin, down about 20-ish%, right? Although historically, these are quite common dips for Bitcoin. I just think that because a lot of people in this space are new, and a lot of people have also been buying altcoins, this situation seems a lot worse than it may actually be. But if you do have a look at what's going on with a lot of other things, you also have the S&P, for example, falling back into this channel. Right now, we have had some fake outs down into that area, but it's interesting. You're seeing, stock market, a lot of the stocks are falling. Interestingly enough, you have the DXY falling. We've also seen oil falling, as well as gold, which gold actually, I have to give it credit where it's due. Gold has been doing well, for gold. I mean, it's up, but, gold is up like 150% since like 2017. Bitcoin was like $1,000 in 2017. So obviously Bitcoin is the faster horse, but it does also have this volatility, right? So, what are some of the things that could be causing this? Well, ultimately, really, the real reason is because there's more sellers than buyers. That's the real reason. But of course, people want narratives, right? Well, something that could be scaring people a bit is this Trump, tariff situation, right? For example, the Bank of Canada is saying that the US tariffs could trigger the worst crash since 1992, with a potential 2-year recession ahead. Now, look, I've heard all of these before. I've been listening to guys, not actively, but you have like Robert Kiyosaki and all these other guys that have been calling for the largest crash in history. I mean, this has been going on for decades. We really haven't had it. Maybe at some point it'll come. I just kind of take it with a grain of salt, kind of goes in one ear and out the other. But also, don't forget, guys, we did have the largest hack in crypto history. We had $1.46 billion that was stolen from Bybit from the Lazarus group. Now, this was in Ethereum, so that wasn't really good for the Ethereum price. Obviously, even though that wasn't directly correlated with Bitcoin, Ethereum tends to be the top altcoin, so that kind of has its trickle-down effects. I mean, even FTX was only 482 million. I say only, That's still a lot of money, but that could be adding to the situation. Plus the fact that, speaking about FTX, Sam Bankman-Fried has just randomly started tweeting over on X again. Who gave the guy a phone? I have no idea. And the other thing that we talk about is there's always the conspiracies, right? There could be conspiracies. Who knows? It's really weird because 3 months ago, Tom Lee was actually over on CNBC, and he was talking. This is 3 months ago, keep in mind, and he was talking about how there is this sort of behind the scenes active sort of approach to trying to keep the Bitcoin price below 100,000. I'll play that clip and then we'll talk about it.
There's a lot of folks who don't want Bitcoin over 100,000, and some of it may be the exchanges themselves are concerned because there is a pretty low supply of Bitcoin available over the counter.
And then adding on top of that, just yesterday we had BlackRock transferring $44 million worth of Ethereum and $160 million worth of Bitcoin into Coinbase. So there is sort of that question, why are they moving the funds into Coinbase? If they're doing that, maybe they're looking to sell. But then again, keep in mind, everybody always goes BlackRock, right? But really BlackRock, unless they're doing something internally, is ultimately just holding it on behalf of their clients, right? So, by the way, guys, today's video is going to be super quick. So, do me a favor. If you like these shorter videos, smash up the likes, drop a comment. It does help to allow more people to see this content. So let's get into the charts. I'm not going to play any videos today. I just want to talk about what is actually happening. So as you guys know, Bitcoin is known for these massive 30 to 40% drawdowns. And really in this bull run, we have only, and yes, it is a bull run, by the way, we've only seen, about a 21% here. We had this crazy one. This was about another 21%. We had this sideways, right? Which, by the way, this went sideways and down for, about 189 days. That was about a 28%. So that was closer to the 30% that we're used to seeing. And currently from top to where we are right now, we're only down under 20%. And just to look at where Bitcoin is, we are still holding above this super guppy, right? So this is still an uptrend. You still have higher highs and you still have higher lows. We went sideways for how long here? Basically almost 8 months over the last summer. A lot of people were losing interest. A lot of people thought the top was in. They were saying it was a triple top. They were saying it was a head and shoulders. They were saying everything about it being bearish. And then right around here, it was September, and boom, blast off to the all-time high, right? So you can end up coming all the way down to the bottom of this. You can come all the way down into this green. We've done it before. That level would be around almost 70,000 roughly, and still be putting in an uptrend, right? Now, there was something that we talked about, and it was, I suppose, a bit controversial. I wasn't happy to discuss the news of this, but we do have a CME futures gap down here. These CME futures gaps have about roughly a 96% chance of closing, right? So there's always a 4% chance that it doesn't close. And look, I wasn't happy to be talking about that when we were up here, right? When we were up here and, we had this, what do you call it, resistance acting as support, it didn't seem likely, right? And, actually, in all honesty, this does seem like an area where we could see a bounce testing on this heart line right here. So we could see a bounce potentially back up to maybe 91 or 92, kind of the bottom of this area. But, there is one big problem. And that is basically that you see this blue area right here. We don't have really any serious price action in this area, right? We have tons of price action right here between around 55 and 70. And we had a decent amount between that 90 and sort of 102, right? So these areas, you could say, you're building the foundation, right? And this could be building the ceiling potentially. So, we may end up becoming range bound in this area. And what you can see is that even so, that would still be an upwards trend. And I know it's crazy to fall 30%. Actually, what would that be? If we were to fall there and close this, what is that? Okay, that would be a 35% pullback. And I can guarantee you a lot of people would be freaking out. And especially when it comes to the altcoins, yeah, that's the thing. You can get these 30, 35% pullbacks for Bitcoin, and your altcoins are going to do 50, 60, 70, 80% drawdowns. And, just getting away from the charts for a second, this is why I have been so, I don't want to say against the altcoins because I don't want to offend anybody, but I'm just trying to tell you from years in the space, really, you need to focus on Bitcoin. I know you don't want to hear that, but you've been waiting, or people have been waiting, not you specifically, but people have been waiting for a dip, right? Gosh, I wish I could have just bought cheaper. Well, now you're getting that opportunity. But the question is, what are we doing? Are we just giving it to the entities? You know, we've seen how it's been shifting from retail into the institutional. The retail used to be able to front run it. Now they're falling behind, right? But if you're having a look at what's going on in the charts, this is very normal and very healthy. Now, obviously, there is a lot going on right now, but even just looking at these Fibonacci extensions that we've had for quite a long time. So this area right here, this represents the current cycle, and this area right here represents the previous cycle, and then you could see where there's a lot of overlap, right? And you could see that lots of these, you could basically just, not blindly trade these, but if you are trying to scalp trade, you can play these levels, and they do tend to line up quite well. So we had the 4.236, which was the original. So, you know, obviously you take the top from here, you go down to the bottom, you extend it, and that's where we got this area. That area is around 73,825. So that would be an extremely logical area for Bitcoin to come down to. And that would also be retesting this area right here. And get this, guys, it still wouldn't be bearish, because look what you'd have here. You would still have an upwards trend, right? A little bit of a fake out here. And the thing is like, it seems so large when it's happening in the moment, but when you zoom out, you know, when you really zoom out, these are very natural corrections for Bitcoin to have. It just, I think what's going on right now is there's a lot of new people that have not experienced these types of things. And at the same time, there are also a lot of people that have, I've seen people, I saw a guy that said he's been in crypto for 7 years, and he now officially has wiped his full account out. That makes no sense to me, because 7 years ago, the price of Bitcoin was below $10,000. Depending on when you bought. I mean, in 2017, in the beginning of the year, Bitcoin was 1,000. So that's a 90x. So if you've been in crypto for 7 years and you don't have any money, that has to come down to just not being able to manage your position, recklessly buying into these scam coins, okay? And I don't know what to tell people who are doing that. So ultimately, is there a level in which we should become concerned? Well, historically, if we just look at the moving averages, yes. The 50 moving average, as you can see right here, so you have this green, 21 exponential. This one, it's okay if you lose it. It's not a big deal. Although when you flip to the downside, it usually means that you're probably going to have a little more bearish price action, which is signaling that since we did break below it, you know, for example, we broke below it here, it was bearish for a while, but we were held up by the 50. Now, these other lines down here, the 100 and the 200, those are more of like bear market type support bottoms. You really don't want to go that low in a bull market. That's when things get bad. And the other thing is when you start to see these death crosses, right? So you have this death cross here, and then you have this death cross here. Now, of course, you're not going to get the exact top. No one's ever going to get the exact top. If they say they do, they just got lucky. You would literally have to be Nostradamus to be able to know that. And I wouldn't even pretend to be able to know that. Currently looking at this right now, you would basically have to have something like this, okay? This would have to just continue to roll over, continue to roll over, continue to roll over, and, you know, this is going to keep rising. And at that point, that is when you would probably say, okay, you know what? We're probably due for a bit of a bear market. But the thing is you see the support on the 50 here. We have support on the 50 here. So where is that? Well, that support currently at the time of making this video comes in at around 74,000. And if we go back here to close the CME futures gap, we only have to go down to about 77,500-ish, and that would still maintain this upward sloping trend, which means we are still in a constructive pattern, which means no, it is not. By definition, is it a bear market? Traditionally speaking, if you fall below 20%, then yes, you are in a bear market. But I don't think that applies to Bitcoin, because if that's the case for Bitcoin, then Bitcoin goes through about 6 bear markets to 7 bear markets within each bull market. So I don't think the same, logic that applies to essentially traditional stocks applies to Bitcoin. It's still small, even though Bitcoin is the king of crypto. It is the largest crypto. It is the most liquid. It still is small in comparison to, all the money in the world, right? So it still is quite young and quite volatile, which is why, you see this, especially the downward correlation, upwards correlation, it's kind of iffy, but downwards correlation, especially with stocks, unfortunately, Bitcoin tends to get hit a lot harder, right? But, like Bob Lucas said, the interesting divergence between price and sentiment here is that Bitcoin is down 20% from the peak, especially after a prior 105% move higher. It's barely a garden variety pullback. So you have a 105% move and then you have a 20% pullback, and suddenly everything is over. It's not, guys. Like, that's the only reason I could be so calm about this, is because when you've gone through so many cycles and you've seen this happen so many times, it's hard not to get emotional when your money is on the line. But I think a lot of the emotion is coming from the fact that so many people are allocated to these millions of altcoins and meme coins and scam coins that have no intrinsic value. They're offering nothing to DeFi or the space as a whole. They're just gambling is what's happening, and they're getting wrecked. And I think that's why the sentiment is so bad, because if everybody was just holding Bitcoin right now and we're just down 20%, that's just a walk in the park for Bitcoin. I mean, look like, Ether National pointed out, we had a very similar movement back here between August and September when Bitcoin, this is, I don't know what year this is, he cut the year off, but whenever Bitcoin, I'm assuming this was probably 2018-ish, 27, yeah, something like that. And you could see 11,000 to 14,000. We fell all the way down, and we're doing a very similar thing right now. And look what happened after that. I mean, you can imagine that after consolidating like this for how long, coming all the way down here, remember, to fill that sort of empty void, people probably thought it was over. And look what they missed out on. So imagine if you took that fractal and put it over here, you're talking about $180,000, $190,000 Bitcoin, right? And, just got to ask yourself the question, what if this is the first sentiment extreme into the bear trap, right? What if this is this part before the major blast off? Because a lot of the things that we've been looking at are not showing any sort of top signals. Nothing is overheated. There's not a lot of Bitcoin on exchanges right now, right? So I don't see, the only reason that I know sentiment is as bad as it is because I'm actively in the space. But if I didn't know any better and you just showed me the Bitcoin chart, I would have no idea that there's this much panic going on right now. And again, this goes back to a lot of people with altcoins and other things like that. I mean, you have Metaplanet purchasing 135 Bitcoin, right? Along with MicroStrategy. And you have inflows to accumulation addresses massively, massively booming, 2.5 billion, as the retail is freaking out. And look at this. Retail used to be the leaders, right? But look at the change in Bitcoin ownership just as of last year, okay? Down 525,000 for individuals, up 519 for funds and businesses, okay? So the funds and the businesses are accumulating the Bitcoin while the retail is selling the Bitcoin so that they can buy these meme coins and gamble away all their hard-earned money. And it's upsetting a lot to read this stuff because there's no reason that anybody who's been in these markets for more than a year even should be down. If you basically bought, unless you just literally bought the absolute top, you just started buying Bitcoin, like a couple months ago, then okay, you're down. But if you bought Bitcoin anytime last year, literally anytime last year, anytime, you are up today. You can't say that for Solana. You can't say that for Ethereum. You can't say that for a lot of these tokens. A lot of these tokens Ethereum is basically trading at the same price that it was 2 years ago, right? So I don't know, I get called a maxi, but there is a reason that I speak Bitcoin on this channel. I know you want to get rich quick. I get it, right? We all want to be millionaires overnight, but Bitcoin is a get slow scheme, right? That's what it is. And yeah, so that's where I'm ending the video. I'm going to keep it a little shorter than usual. Friendly reminder, guys, if you do want to trade, learn to hone your skills with something that you can actually, meme coin trading. It's out of your hands. You don't know who owns it. You don't know who's going to rug. You don't know the insiders, right? If you want to learn to trade, you can teach yourself. And if you do feel like gambling, you can go over to something like Blowfin. And I do call it gambling because leverage is gambling, especially if you're using high leverage. But if you're using something that makes sense and you understand the percentages, and just for example, if you guys do want to use this, get 10% cash back on Blowfin. This is going on until March 4th. But, if you do have the itch to gamble, and that's what it is basically, you can do lower leverage, right? It would have to crash 50% for you to get liquidated on a 2. 33, right? For a 3x. 25, right? For a 4, 20 for 5, and et cetera, et cetera. But you can see how it starts to get so crazy. So if Bitcoin is already down 20%, okay? And you're looking to enter your position now, if you hedge with a 3x, do you really think Bitcoin's going to fall another 30% from this 20%? It could. It might. But it's probably not going to historically. And I'll tell you what, if Bitcoin does end up falling another 30% from the 20%, then I can assure you things are a lot worse, probably globally, that probably Bitcoin is not the thing that you even need to be worrying about at this point, right? And you can use tools like meta signals, which will help you also with your trading, right? And again, I mean, you could just buy the altcoins if you want, you can buy the meme coins, or you can dollar cost average, which literally works 100% of the time as long as you wait long enough, or you can use something like meta signals, which, you know, obviously gives out these alerts, and then you can compare it to your charts and you can trade. I do have links below. Obviously they do have NFTs, and they did just bring back the if you guys do want to use the trial access, you can also just buy this if you want. I recommend the NFT because, well, actually now that Ethereum is so cheap, the NFT is cheaper because it's priced in Ethereum. But honestly, do what you guys want. Like, obviously, Meta Signals is something that I had invested in. It is a project that I believe in. I've been watching it for 6 years. But again, don't take signals from anybody, not even me. I'm just a guy on the internet. But at the end of the day, a lot of this panic is just coming from new people in the space, not used to the volatility, and being extremely over leveraged, putting more money in than you can afford to lose, and gambling in these freaking stupid meme coins, which are all going to zero at some point. They're all going to zero. And I'm sorry if that pisses you off, but someone has to be the voice of reason, because all these other influencers, who, by the way, are like probably getting paid or getting allocations to dump on you guys, which I don't do that. I don't dump on anybody. I don't promote scam coins. I don't need to do that. I don't want to do that. I want you to win. And all I'm saying is that these are the opportunities that we've waited for. We've waited to have these corrections. It's not out of the cards to fill the CME futures gap. It's not out of the cards to have a 35% correction. Like I said, I do think we might have a little bit of a bounce incoming, just because we are potentially a little bit oversold. So you could see a bounce, but considering we did lose some of that important support, I do think that it could get a little bit worse before it gets better. Okay. But after that, the cool thing is that usually, let me go back to this real quick. I know I said I was going to make this video short, but after you build those bases for so long, right? Let me extend this out. Say we do, come in here and, we come down, we fill the CME futures gap, we start trending upwards. Even if we have a fake out, right? We can have a fake out, come back up. That's fine. You don't have to hold this trend. I mean, as long as we don't fall below 50,000, it's still an uptrend. And once you end up building that support, like you built this support right here, eventually this will become support and this will become support. And then you literally won't see those prices again. Like, you just won't see those prices ever again. But this is just how markets go, right? When you zoom out, you see the big picture, you get it. So that's it for me, guys. Thank you so much for coming back to the channel. If you do want to trade, I have these tutorials right here. Like I said, dollar cost average. If you were looking for the dip, now's the opportunity. If you're buying meme coins, just know that there's like a 90 plus 99% chance you're probably going to lose your money. But that's on you if you want to do that. Or you could just do the Bitcoin thing, which works. And yeah, you might not become a millionaire overnight, but these are the opportunities that people have waited for. And if you think Bitcoin's going to 1 million or 5 million, or Michael Saylor says 13, well, then I think it's a no-brainer. So until next time, guys, I love you. Stay crypto. And of course, peace out.